The top business stories live from the Sky News City studio. The road that speaks volumes about the state of China's economy will have a special report. Danish company Novo Nordisk becomes Europe's most valuable business as it launches its weight loss injection Wegovy in the UK. Plus, the Manchester-based tech company aiming to help brands make their websites more social. Good afternoon, this is Business Live with me, Ian King. For decades, the Chinese economy has delivered huge and consistent growth. But now it's not only slowing, there are actually major signs that the economy is in more serious trouble. China's model for growth, based on huge borrowing and building, is no longer sustainable and has become a huge liability for the debt-laden nation. Well, it comes as Beijing has confirmed that Xi Jinping won't attend next week's G20 summit, sending China's Premier Li Qiang instead. And some observers are suggesting that it's a curious decision when all eyes are on the Chinese economy. Well, our Asia correspondent, Helen Smith, has travelled to the city of Zunyi in South China's Guizhou province and sent this report.
In the city of Zunyi, there's a road that speaks volumes about the state of the Chinese economy. A multi-billion yuan expressway, one side unfinished and abandoned, a symbol of a system that's stuttering. On the other side of the hill, we find a connecting tunnel where the project has abruptly stopped. Pillars show where it was meant to continue, as do blocks of homes vacated, lives moved on to make space. Just a small number of residents have hung on here. Shi Chengli is one of them. She's lived here for 40 years, but her life is now in limbo, and she has a clear idea as to why.
The main reason is that there is no money. The state does not have any money left. I signed a contract. They said we would have a new apartment in 3 years. It will be the 5th year in September.
Everywhere you look here is infrastructure unfinished. In fact, Guizhou province is one of the poorest in China, and it is also the most indebted. And the reason is the model of growth that for so long drove such remarkable numbers. Huge borrowing, vast building, regardless of whether the projects were really needed. The problem now is that China is drowning in debt and there is essentially nothing left to build. It means the country is littered with sites like this, the most visual representation of an economic model that was never sustainable. These problems aren't new, but they're biting now, as things haven't bounced back post-COVID. Consumers cutting back after months of lockdowns that shut businesses, depleted savings, and left confidence in tatters. Business is a lot worse, says this woman. It's bad now, getting worse year after year, and we're not doing well. And perhaps the most ominous threat, the Chinese housing market. Sites like this, unfinished work slowed. Developers that can't manage their debts, leaving buyers stranded and confidence flawed. This site is run by Country Garden, the latest giant to run into difficulty. Li Shangguo is one of the few workers left. He says others elsewhere are not getting paid.
Nowadays, all the big projects are like this, even good projects. Workers sometimes only get their money at the end of the year, which is a good case scenario. Some of them can't get it at all.
A sales representative here told us the site is proceeding as planned. And while experts say all this is unlikely to cast the economy into major meltdown or crisis, the era of miracle growth is clearly over. And it is people who will pay for the slowdown. Helen Smith, Sky News in Guizhou province.
Some other stories for you now. And the biopharmaceutical services firm Ergomed has agreed to take over by funds managed by the private equity firm Permira. The deal values Ergomed, which is based in Guildford, at £703.1 million. Ergomed, which was founded in 1997 and which employs 1,800 people, provides specialised services to more than 300 clients in the pharmaceutical industry to support the development of new drugs. In particular, it specialises in so-called pharmacovigilance, the science and activities related relating to the detection, assessment, understanding and prevention of adverse effects with medicines and vaccines. Hundreds of jobs at Wood Group have been secured after the consulting and engineering company signed a contract with Harbour Energy, the biggest independent operator in the UK North Sea, worth $330 million. Under the agreement, Wood will provide engineering, procurement and construction and operations and maintenance services for a number of Harbour's offshore assets in the UK North Sea. Wood said the partnership would support the employment of hundreds of people at its operations business in Aberdeen and in the North Sea, and would also lead to new jobs being created next year. Barclays is said to be looking into selling its business which processes payments for UK merchants. Reuters is reporting that the bank distributed a presentation on its domestic merchant acquiring unit to potential buyers over the summer. It reported that the business could attract a price tag of at least £2 billion. A sale would echo similar moves by other European lenders, including Sabadell, the Spanish owner of TSB, and Intesa Sanpaolo, the Italian bank. And shares of Novo Nordisk have hit an all-time high after the Danish company launched its weight loss injection Wegovy in the UK. The Danish drugs giant said the weekly injection would be available through a controlled and limited launch. The product's already on sale in Norway, Denmark, Germany and the United States, where the company's inability to keep up with demand has delayed the launch in most of Europe. Novo Nordisk is now valued at $424 billion, making it Europe's most valuable company. Lars Fruergaard Jørgensen, the chief executive of Novo Nordisk, appeared on this programme in February last year. Here's what he told me.
Our company is controlled by a foundation which was established by the founders close to 100 years back. So this really looking ahead, taking a number of decades perspective in how we do business is really what has brought us the strength we have today. And what we do today is not that dissimilar from what we started out doing close to 100 years back. So we are there for the patients. Our purpose is to drive change. And we really think about that in the sense of more than medicines, also helping prevent diseases.
Now, a Manchester-based company has become the first British firm to be given default browser status by Apple, joining the likes of Microsoft and Google as one of only 9 worldwide. Chatloop was set up in 2021 to make business websites more shareable on social media. Online users are able to hold conversations on company websites without reverting to third-party sites such as Instagram and TikTok. Well, joining me now from Manchester is Andrew Barlow. He's founder and chief executive of Chatloop. Andrew, welcome to you. How transformative is this for your business?
Yeah, I mean, it's fundamental in terms of really giving us the accreditation that we require really to compete on the world stage. I mean, for many years now, you look at the likes of Google and Microsoft, who have had the majority, and Safari, who've had the majority of share, and now Chatloop is a challenger to that, and it's something that we're immensely proud of, and you know, it'll give us a big boost when it comes to user acquisition and also retention as the business grows.
Yeah, I mean, this is going to put you on hundreds of millions of devices around the world. What sort of things did you have to do to convince Apple that you were worthy of this listing?
Actually, it's to break the numbers down for you. There are 4.2 billion Apple devices globally, and there are only 9 businesses in the world that have default browser status. Of those 9 businesses, 7 of them are in the US. There are 2 in Europe, and there is 1 in the United Kingdom, and that is us. In terms of how you get that status, it's something that you have to apply for. We've been working hard over the last 12 months in collaboration with Apple, meeting the strict requirements that come, you know, with things like privacy, security, scalability, etc. And we were able to achieve that milestone in January of this year.
And when does the browser formally launch? Is it available? I know it's been in test mode for a while.
Yeah, so we launched in beta in December of last year. We're actually collaborating with some of the world's leading brands. What we did at Chatloop was a little bit different. Rather than build and develop the technology and then and then put it out to test, what we did is we started an open innovation program where we created a co-creation lab. And we invited some of the world's largest organizations to come in, join our design teams, and ultimately participate in that process. So we've been in beta for a while now, and we look to launch in full scale early next year.
And how do you make money? What's the business model?
Well, one of the things that I would say is that Chatloop looks to solve some of the challenges of the past with social media. And as a result of that, we focus on an ad-free environment, really, an environment where we can create hyper-personalized experiences, but that we're not under pressure to monetize users' attention, which can have an adverse effect on ultimately, user behavior and the health of users. So what we do is we have a subscription model that allows brands and consumers to connect in new ways. I mean, you've got to look at this and think, actually, when people use browsers traditionally, it's quite a solo thing. You kind of, you do it on your own. Whereas what Chatloop does is it really opens up the potential for consumers to speak to other consumers, and for consumers to have relationships with brands and vice versa that have never been seen before. And as a result of that, we have subscription models that will allow additional features that ultimately will enrich that experience and create a transformational consumer to brand experience moving forward.
You've just outlined some of the potential uses. What do you think is going to be the most common or the most popular usage of the browser in future?
Well, I think it depends who you speak to. For the first time in 2 decades in technology, my wife has an interest in what I do. What I would say is she likes to use it for retail, so consumers can share experiences with each other about the clothes that they've purchased, how it fits. And what we do see is that 95% of consumer purchase decisions are now informed by user-generated content. So we talk about content like unboxing videos, podcasts, reviews on review sites. They inform consumer purchase decision making. So, from us, we've had use cases with some of the major brands that we're working with using Chatloop for things like travel, so that people can share their experiences of going on holidays, their experiences of buying products, but also their perspectives on world news. Actually, I don't know if you know this, but Chatloop was actually, the founder story of Chatloop was that I was reading Sky News and I read an article and I wasn't able to give my view. And what Chatloop does now is it enables me to drop a Chatloop right onto Sky News and start a conversation that is in context and share your opinion. So there's a lot of different use cases, and we're excited to see how people use it moving forward.
That's I hope that doesn't mean you're going to have people saying that Ian King, he's a useless business presenter.
I shall drop the first Chatloop on an article by you, Ian.
Bless you. Thank you for that. Andrew, good to talk to you this afternoon. Thank you.
Good afternoon. Thanks.
Still to come here on Business Live, we'll have a look at how the markets have finished up this Monday afternoon. Don't go away.
We're gonna rock down to Electric Avenue, and then we'll take it higher.
One doesn't know quite how great one is. From time to time, somebody says, "Oh, you're great," but it's the people that make you great. Whatever it is that you do, the people. It's all about the people. And so I feel good that the people have chosen to induct me into this august body. When something happens like this, you think, man, has it been so long? I don't feel that old. I don't feel that I was making music that long, but it's been longer than that. Obviously, because I have had 2 careers. You have to understand that what we're talking about here is not a spurious nonsense. It is the greatest crime against a body of human beings to whom a multitude of wrongs have been done. I think that politicians and others who seek to make political mileage out of it are wrong. I've been disappointed in my country's approach to it because, you know, everybody talks about paying reparations. It's not just about paying reparations. Before you can even get to that, you have to recognize that what you've done as a body, I mean, Europe, there are many countries that didn't engage in the African slave trade. We're not talking to them. We're talking to the people who have done so.
Fly Emirates, fly better. Fly Emirates, fly better.
Well, equity markets in Europe have had a pretty lacklustre session this afternoon after enjoying gains earlier on in the day on news of more economic stimulus in China. Wall Street, of course, is closed this afternoon and so could not give much of a lead in the afternoon. Here's how the continental European indices have finished up, all of them in negative territory. Here in London, pretty similar story. The FTSE 100 has given up the gains it enjoyed earlier on in the session. It's finished off a sixth of 1%. The miners Glencore, Anglo-American and Rio Tinto made the early running, but the leading blue chip gainer at the end of all that was the gaming group Entain, up about 2%. That's not on the screen. Among the fallers, and there were plenty of them, Admiral, that hit its highest level last year, all year last week. So it looks as though it's run into a bit of profit taking. Perhaps they're off nearly 2.5%. Similarly, Johnson Matthey, that surged 13% on Friday after a big US investor doubled its stake. That's come off a couple of percentage points this afternoon. Outside the FTSE, the Watches of Switzerland is up by some 3.5%. Some big director buying been going on there. While EasyJet is up just over 1.5% on the back of the latest Ryanair traffic statistics. Elsewhere, Superdry fell to a new all-time low, down nearly 18% at one point after the stock resumed trading after a suspension owing to the delayed publication of its annual report results. On the foreign exchange markets, well, sterling's in the pink again, up 0.25% against both the US dollar and the euro as investors look ahead to another interest rate rise, probably from the Bank of England later this month. As for the oil price, that's little changed from Friday when it hit its highest level since the 23rd of January. A barrel of Brent crude will currently set you back $88.93 a barrel. That's up just under 0.5% on the session. Joining me now is Michael Browne. He's Chief Investment Officer at Martin Currie, part of Franklin Resources, one of the world's biggest asset management firms. Michael, good to see you. Last week was really curious. I mean, August was a pretty rotten month for stock markets everywhere, but last week was great. Why?
Well, so you've got the whole of the China slowing down, everybody worrying about the macro outlook, everybody worrying about that fourth quarter. And yet it took the negative PMI data, and let's be honest with you, the European PMI data was really tough. To suddenly everybody go, well, hang on, we've got negatives coming out of China, maybe we've got some negatives happening locally, maybe interest rates don't have to go any further than, and certainly not as far as we thought, and therefore you get a little ray of sunshine at the end of August.
Yeah, and the US jobs data kind of fed into that, didn't it?
Exactly, the same story, the same narrative that it wants to sell, which is maybe these economies have got to a point where they're slowed. They're not going backwards, but they've slowed.
Yeah, it's just what the central banks would have wanted, really.
Is it, or is it enough? I mean, it's quite interesting. If you look at any of the economists that have come out of the central banks and now in public markets, you'll sit there and go, oh, they want a recession, right? They're not going to get it, right? And I think that's going to be the big story. They're not going to get the recession that they would like, because I think we've all got a bit cute about interest rates.
Yeah, well, I mean, here we are in September. September and October, traditionally really bad months for the markets. Do you see much to persuade
Ian, I've got to pull you back on that one. We've had a few very dramatic Septembers and Octobers in our careers, OK? But on average, if you take those out, actually, it's not such a bad month. So let's give the autumnal months a little bit of more, cheer. Actually, January and February are really tough. Yeah. They're the ones that you don't want to be involved in. And I think that sets a really nice scene as we go forward here, because, we're going to see slightly weaker economic news as a result of this PMI data. It'll vary around, it'll wobble a fair bit. And then people will get to the end of the year and they'll start looking forward into 24 and think, how much growth is there going to be around here? How much are we going to see? And I think there you're going to have a tale of two halves. First half, probably a little bit weaker than expectations. Second half, almost certainly quite a lot better, because that's when that real wage increase, which is in the pipeline, it's coming, will start to kick in.
Well, let's talk about an individual stock now. I mentioned Superdry, which has just had a really torrid day today. It's had a torrid couple of years.
Torrid 4 or 5 years now, to be quite honest with you. So where are we with Superdry? You have this brand, and clearly there is some value. After all, they sold the IP in APAC for 34 million in the first quarter of this year. That wasn't enough to fill the balance sheet. I mean, we've ended with 24 million pounds of debt on the results on Friday. And I think that surprised me from that point of view. Has the product got enough design in it to be able to carry its way through the critical period up to Christmas? And I think there'll be 4 indicators I'd really look at. One is, what's the inventory level? We can't honestly really see that at this point in time, but you, the consumer, will be able to see it, because if they start discounting hard in front of Christmas, they've got too much inventory, and that they're trying to sell for cash, and that's not a great sign. However, if they do maintain full price sales up to Christmas, then actually this thing is turning and they are getting some real traction. And I think that, for me, would be the critical second piece. The second piece would be, if you want that jacket, classically, right, can you get it? Again, if you can't get it, then it's a good news. If you can get it, maybe it's not so good news. And lastly, do they do some more IP sales? They said they will. Where would that be? What they mustn't do is sell the core piece of the brand, which is UK and Europe. Other bits, OK, fair enough, can you monetise that and get through what is clearly going to be a difficult cash flow into 24, probably a difficult cash flow into the beginning of 25, but there is an opportunity. I mean, after all, there's 550 million, 623 million sales a year. There is something there to get your teeth into if you can just get through this particular period now.
Yeah, and Julian Dunkerton, the founder and CEO, gave an interview to the Sunday Times yesterday. He obviously still believes in himself.
I think he's always believed in himself. Yeah. He's a magnificent character. He's always optimistic, and you have to admire him for what he's built. I mean, as I say, the sales number tells you there is something substantial there. But, can you get through, from a cash flow point of view, from here to there? And I think that's going to be the critical question.
Yeah, huge disruption of value, hasn't it been?
It's not been the finest tale since the peak, where we were a couple of billion market cap. It was opening stores left, right and centre. It was controlling. I mean, it was almost the next Abercrombie and Fitch. Yeah. Never quite got there.
No, it's a shame, isn't it? Because we need a few more UK market leaders, don't we?
Well, and that's the other piece. Have they got enough time to devote to developing good products so it's exciting, it's new, it's catching the consumer's eye whilst they're going through this whole process?
All right, Michael, got to leave it there. Great to see you this afternoon. Thank you. That's it from me. I'm back with Business Live tomorrow morning, again, at 11:30. Hope very much to see you then. In the meantime, do stay tuned. Coming up after this short break, it's Mark Austin. Thanks for joining me today. Cheerio.